What is going on, everybody, and welcome to another weekly update. And what I like to do in these videos is provide you guys some upcoming events, some upcoming earnings to get you prepared for the week ahead. That sounds like something you're interested in. Consider subscribing, as I do provide daily content on Twitter and soon to have current events. So, that being said, current market sentiment. What is going on in the markets now? At this point, with the big event we kind of had over the past week was core CPI. Let me go ahead and pull this up as the usual and kind of go over what we've seen over the past week. Now, something I've talked about coming into this past week was that we really only have one big event. Aside from that, I should say there was a couple smaller events, more insightful events that occurred this week as well. But aside from that, we are ultimately waiting for earnings. As what we've seen is a lot of the big data or big information that's coming out that's very like pivotal to everything that goes on is the earnings. Earnings are where we're losing banks, where we're finding out about more job losses, and a lot of really impactful information that is really giving us a true grasp on what is going on in the market. And so, that being said, over the past week, we had core CPI come out. Now, the U.S. inflation rate raises to 3.7 as expected to 3.6, and that is coming from 3.2. So we did see a gradual increase on the last inflation. This one has jumped way back up, and it's primarily due to a 10% jump in gasoline. And this is something you have to understand about inflation. Just because some prices come down, then the inflation rises in other aspects that essentially your everyday expenses essentially come out. And so that's where inflation is getting sticky and becoming a problem. And so that being said, this is why inflation is hard to battle, because once you fix something, whether that's in services or whatever the case is, which we've seen headline inflation come down a little bit, still way up there in the high fours. So that is still the problem. If their target is to get down to 2%, which Powell has stated over and over and over, then you still have a lot of work. So you can see why essentially the Fed are continuing to increase rates. But coming into this next week, there's a very high probability we've only got three more monetary policies left by the end of the year. And so this is something you need to keep in mind. And so at this point, we are not projecting to have any kind of increase this week, but there is a pretty high, it's about roughly around a 50% chance there will be one in November. Again, we will have a lot more information. We will start getting earnings. We will start getting another core CPI before we go into that November monetary policy. I think if there is no increase in monetary policy in the November, that ultimately what's going to happen is we will actually have hit a pause on potentially this monetary policy if we do pause. So these are things we need to keep in mind. We did have the ECB unexpectedly raise rates, 25-point basis move. They are expected to pause. At least that's what they're projecting. Although the numbers are saying otherwise, that there's still a good chance that there'll be multiple more increases. Again, you have to understand what is going on in the world, and you can't go with this idea that everything's just going to wash over and everything's going to be fine, because of the fact that China is doing everything that it can. China, you think our debt is bad? China's debt is way worse than ours. And not only that, they are doing everything that they can to stimulate their economy. They're actually forcing banks to buy stock, which is something and a lot of people might question, well, why is the stock market still going up? And that's primarily due, I think, then we may be forcing our banks to buy stock as well. So that's something you have to keep in mind that could be done. They're not going to advertise these things. Again, they're not trying to draw panic. At the same token, they're still manipulating a lot of stuff in their favor anyway. But something I've always talked about is uh, you need these cycles of normalization to occur. You can't fight it. It needs to happen. People can't. It's too unaffordable, and to be able to persevere, to be able to grow, you need prices to come down and stabilize and normalize, and we're not allowing that to occur. And essentially, the Fed, the administration, they're allowing this to happen to this point, right? This point that we're talking about, the cycle is kind of the end of the cycle. So the past couple of years, they've just allowed it to happen. Like even if we didn't have the pandemic, it still would have happened. It probably would have took a lot longer. But ultimately, understand the huge injection of all the money has just essentially accelerated this whole process to where it's going to be a bigger move on a correction, and because of the amount of money that's been printed. And this is also why they had a lot of people came in the stock market when there was this huge historic uptick for 2 years where you just bought the dip on everything that went up and everything just exploded. I do believe that's going to happen again, and it will be big again because you have a lot of money but in the system. But you have to understand that we need a reset until the Fed start cutting and we price in a recession. Will we get that reset? You can't try to jump ahead of this thing because it's only going to cause the Fed to have to hold rates even longer. Being said, I don't think it's retail investors or institutions that are holding up essentially the stock market. It could be the banks essentially that are holding and forcing to have to buy to keep the stock market propped up. So these are things you need to pay attention to and understand that you can see it in a lot of the numbers in essentially the different tools that banks use for FHA loans and stuff. There's a pool of money that essentially they can pull from, that they have been pulling from at ridiculous amounts to stay solvent. And again, you won't know that unless they bring those books to market. So again, there's a lot of things that go behind closed doors that you really don't want to know about because it would put you in a frenzy. So anyway, being said, the past week we got some good useful information there. Google, one of the companies that was something else that also came out as well. Google was another company that didn't do really any layoffs. When we had those big tech layoffs, they held firm. But come this past week, now they're looking to start laying off. Again, some of these bigger corporations that have been doing really well and try to not force the hand are starting to have to lay off. And now one of the biggest news events as well too that I don't have on here is the auto industry is essentially going on strike, and I think they want like $300,000 a year, plus only have to work 4 days a week. And so it's absolutely absurd. So now you got a lot of unions out here that are asking for these ridiculous amounts of money. That's great, because if they do win, what's going to happen is they're going to essentially start cutting workers. You're going to have 2 people to do the job of 20 people, because now they have to pay ridiculous amounts of money essentially to pay for these people. And understand that you can't just demand those things without the production, right? You need production to have growth in any kind of economy. You need the production. That's been the problem, is that the US and a lot of countries are just spending too much money, and they don't have enough production to essentially compensate for all the spending that is going on. And so this is the problem that we're leading into, is a lot of people don't want to do any actual work to show growth. And then on the same token, but their spending just doesn't stop. They get on these nasty spending habits and then just keep spending. And we saw that as soon as the debt ceiling has gotten approved and pushed off until next year, we've been spending at a ridiculous amount of rates. Our burn rate is absolutely absurd. Historical amount of weight. We're just blowing through money. And so where, we don't know. All we know is that Ukraine is getting a ton of money. And we don't know if there's a lot of rumors there. Don't want to get into conspiracy theories there, but you can see the billions of dollars that keep going to Ukraine all the time, while our infrastructure is absolutely getting crushed. And so again, this is why we don't want tons of government. We want less government, because you don't want to have to be, why do the billionaires need to be paying? Again, the administration will focus. You have to always have an enemy, and the enemy is the billionaires, where they're the ones that actually are creating the jobs. They're actually one that are doing the work, creating the growth that we need, but they want to keep spending. So they have to go someone that has the money. So again, they'll attack billionaires, and they'll essentially draw the interest of all of other society to pin them against the billionaires, when in fact, they're the ones that are creating the growth that's allowing us to grow. So if you don't want to get on their bad side, is essentially what I'm saying, because our production, people would rather just sit on TikTok all day, right? So that's something you can't do, right? You need to be productive to be able to have growth for a country to grow. And so with that being said, we will see what continues to happen. As I think right now we're going to have a lot of again, there's a lot of data that comes out all the time. There's a lot of stuff, but again, I'm only highlighting the things that I feel have weight. And again, that can change. It just depends on the market right now. Right now, there's still a lot of stuff that could happen. I think, to be honest, this upcoming week we have interest rate decisions. I really don't think it's going to be much of an impact of anything. It's going to be a pause as expected. The biggest thing again on Wednesday to watch for will be Powell. So you have interest rate decision come out at 2 p.m. Eastern Standard Time, and then you'll have Powell at 2:30 Eastern Standard Time, which again, he has this essentially blanket statement, and then he starts fielding questions. And when he starts fielding questions, like I've always stated, you need to be paying attention to what he's saying. Again, he's been very, very good at essentially skirting around questions and try not to essentially give too much information, because people are looking for hard dates, looking at for as for cuts, whether that's if there's more rate increases. People are looking for those are the kind of questions he's getting, and he's been very good to dance around those questions. As again, it is heavily dependent on the data and what happens. We don't know what's going to happen. So they've essentially, they tell you they're going off of certain data, but it's more so you can tell they're going off of what the earnings statements are, how much of impact. They're watching the headline news like everybody else. They're trying to see what's going on. At the same token, they're trying to essentially filter all the news that's coming out from these banks primarily, perhaps forcing institutions to buy stock to keep the market up, right? I think there's a lot of stuff that is going on that's like that, that they're trying to mask from the public, because if the public really knew what was going on, the public would be chaotic and there would be absolutely no way you can control anything. And so again, to control the masses, you have to have a utopic, hopeful state of the market, or else you're going to get eaten up from the inside, right? Because essentially everybody's going to turn on you. I think at this point, a lot of people are fed up and don't believe anything that comes out anyway. But nonetheless, if you're not trying to paint that picture, you're going to get people even madder. And so you have to be very careful when you are proceeding forward with these statements and everything, because people are on edge, and you're seeing that around the country. All you got to do is click on the news, and you can see all kinds of theft and just absolutely absurd things you never thought were even possible or happening, because of the current state of the economy. You can't tell me we're not in a depression. It looks more like, you turn on the news and it looks more like a depression than anything else. And I'm not talking about just locally, I'm talking about a global depression. And it is very hard and will continue to go on. So my biggest thing though here is I think a lot of this is based off of what's going on with crypto. Now, we've talked briefly about, I don't have the crypto chart pulled up yet, but I want to get this out there. And this is what I think a lot of this is based off of. If you look at the series of events that are occurring, I think because of the spot Bitcoin ETF that's coming out, you have to really pay attention to the actions of these bigger companies, the big three companies essentially that are buying everything up, your BlackRocks, and I can't recall the other two companies essentially that have been buying everything or have huge equity in just about all companies, but BlackRock being the biggest of them. And understand that BlackRock has been buying tons of Bitcoin, and understand that there's a lot of institutions that are trying to get Bitcoin on their rap sheet essentially before the spot ETF is approved. And when that happens, you have to understand, once that happens, a lot of institutions have to start buying. This is why when you hear about stocks being essentially included in the SPX, that these stocks explode, because institutions have to go in and start buying it. They have to have so much on their balance sheet. It's the same thing with Bitcoin. So this is what's going to happen. But sometime between now and March of next year, it has to get approved. And so at this point, this is what I'm talking about. I think our event that we're talking about where the Fed are going to start cutting is going to happen, I think, sometime between now and Christmas, or maybe even in February. To be honest, it really just depends. But that spot ETF is just around the corner, which makes me think October could be the month in which we get a very dark October. We could potentially price in a recession, because ultimately, I think if they did the dip, institutions can buy all the Bitcoin they want. They don't have to approve it at March. They can approve it anytime between now and March. So I think they're waiting for that event to happen, and then they start buying Bitcoin. Then you're going to start seeing the approvals. Then you're going to start your market's going to have a huge boom cycle. And this is what I want to make this very clear. When they price in a recession, first, it's going to be a big event that's going to essentially cause the Fed to start slashing rates. The market will price in a recession, and the market will dump. All your markets, your stock, I'm talking about the stock market, crypto markets will dump. At that point, again, not financial advice, that is the dip to buy, because there's going to be a huge boom cycle, and the stock market, crypto market will boom before the actual economy recovers. And so when the stock market prices in recession and starts booming shortly after, I think roughly around like the back half of next year, they've talked about the back half of next year is when we're going to be in a recession. That's when we'll be coming out of a recession in my viewpoint. And you'll start seeing numbers to reflect that. It's going to be very slow, and ultimately understand that you'll start to still see a lot of the housing problems and everything else occurring, probably more so next year. I think right around Christmas into like the first half of next year, you'll probably start seeing a lot more of that. And then it will be slowly staggered as, we're trying to still gauge. You have to understand the economy will still take a long time to recover. You get a lot of people that have to try to recover. And this is what I talk about. When you have these cycles, you're killing demand. And then once demand is killed and you start cutting interest rates, at that point you're trying to feel out, well, where's the demand? You crush demand, and then you have a period of time which you don't know when demand's coming back. This is essentially what China is going through. Is they're trying to get demand to come back because there's no demand, but you don't know how quick demand's going to come back, because if you lose everything, if you lose all your assets, if you're forced to have to sell your home, if you lose all these different things and you have absolutely nothing in the savings account, you lost your job, you don't know, you're living on the street, whatever the case is, and all of a sudden, things start recovering, you get a job, you're able to start building up your savings again, then you can start buying a house, right? Like that takes a period of time. And this is why when we talk about like the housing, when I talk about like the housing sector and everything, it's going to take a period of time, because it's going to eventually get to where people are forced to have to sell. It's going to flood the supply of homes. And at that point, housing prices will come down. And then again, they'll have to keep coming down, because again, essentially the consumer is at a very fragile state, and it takes time to build confidence back for them to come back in the market and start buying. And so this is why over the next couple of years, you're going to see housing prices drop dramatically over the next couple of years, even though the stock market may be recovered and everything already priced in. So you need to understand the difference between the two and what actually occurs around that time. So nonetheless, I think, again, the stock market will price that in here very shortly, so we'll see what happens. So getting back to this, upcoming events, monetary policy is this week, and then we have November. We only got 3 more left. So we got one this week and then 2 more for the remainder of the year. Core, again, you're going to have one every month, so just pay attention to that. So we're going to get one more core before the next monetary policy. So just keep that in mind. Then upcoming earnings, and something I've always talked about when it comes to earnings is they are strategically placed. Friday, October the 13th, you have JPM, Citibank, PNC, and you also have Wells Fargo reporting earnings. Again, if there's anything bad and the market starts, crashing, whatever the case is, they can take that into the weekend and address it, and then come back in on Monday with a full week of earnings. Essentially, Friday the 13th, essentially will kick off the rest of the big earnings. And then we'll have, essentially after that, we have Netflix and Tesla, kind of big tech for that week. And then we kind of roll into some of the other bigger earnings with Apple and Amazon, and Apple doing absolutely horrible. They had an event this week too, which they got they some of the worst reaction that people have seen in a long time. Of Apple's just in a really bad state, plus all the things that are going on with China. Uh, Apple's just is not going to have it. I'm expecting a lot of bad numbers coming out of Apple. Again, you want to start talking about Nvidia again. There could be a lot of pencil whipping there. Maybe not so to drive up the market for the economy per se, to try to drive hope, but I think it's more so to try to drive fear into China and playing this head game, Cold War kind of action with China. And so I believe that's why that could be pencil whipped. Again, it could be, it's just my thesis at this point that that's what that's really for. I don't think it's really for to try to drive hope and make and push up the market. It could be slightly part of it, but I think it's more so weighed in on, right now the advancement is chips, and building AI is the next big thing. And you talk about cybersecurity and everything else, all based around AI and chips in your technology. And so we are in essentially the new Cold War, and understand that that's the kind of games we're playing, right? And so these are things you have to keep in mind that I think are going on, that's of maybe not intentionally push the market up. It may have to some extent, but I think ultimately it was more so to try to flash or flex against China. Again, my opinion, my thesis, but I think that's what it's ultimately for, because we're seeing other chips just aren't doing that at all. And so these are things you have to take into account, and especially Taiwan Semiconductors aren't either. And that was the big tip-off point that, okay, well, if Taiwan Semiconductors are doing bad, why is NVIDIA essentially pushing all these crazy numbers? And so these are things you have to think about, and could be potentially why. And so again, earnings before this last earnings, again, a lot of the stuff was, well, why are they essentially projecting all this stuff? And the numbers just weren't reflecting that. And so nonetheless, we will see. But again, for AI to be big, you need the infrastructure. So to see this reflecting in any other companies like Microsoft and Amazon, Google, and Tesla, you'll see those numbers start projecting at some point next year. And I think more so the back half of next year, when we're essentially, quote unquote, in a recession, which I believe will be, quote unquote, coming out of a recession and recovery. So again, these are things I'm trying to define. And again, just all my thesis going into everything right now. So with that being said, watch list, as you can see, everything's pretty much the same. SPX is slowly creeping up. Again, this week is kind of an event, but not really. Tesla's slowly creeping up. I think you're starting to get more numbers, especially for earnings mode. You have to understand we're starting to get in earnings mode, so we might still pop. We might still try to run up at this point, especially when there's nothing going on. You fall to baseline. Your baseline right now is we are just weeks away from earnings, and that's when stocks like to run. And then essentially they find a top, and then they kind of top out, and then just sit there, wait for earnings, and then they'll have a couple days after the fact where they kind of move up or down, depending on the earnings. And then essentially that stock will start dying off for like 3 to 4 weeks, and then we do their cycle over and over again. It's the same cycle. And stock market is always about understanding the patterns that occur. Understand that when you start talking about macroeconomics and everything, it's very dynamic, and weight changes on specific data, specific events, just depending on what's currently going on. So with all that being said, that's just the sheet. Even with not a lot going on, that's still a lot to talk about. So with that being said, let's take a look at the charts here. So as of right now, what we currently got for SPX, we had a massive sell-off. We also did have a lot of options expirations, and something I talk about, that's what this big red dotted line is here, was options expiration on Friday. And depending on if there was a lot of calls that were sold off, or if there was a lot of puts that were sold off, can move the market. Nonetheless, it was going to be volatile on Friday. And so essentially that could be a lot of call covering essentially that happened there, and a lot of selling off, sell pressure on Friday. So we're going to have to see what's going to happen in this last half before we head in October, and see what goes from there. Again, you have to understand this cycle here is going to be earnings mode. So we could potentially push back up to the 4,600. In my opinion, I kind of have a feeling that's what we're going to try to do. Will we break 4,600 is a question. It's been a pretty hard ceiling. So we'll have to see. I think what might actually happen is this is something that always happens when a market sells off. You get your first rejection. I mean, you can even say here, this isn't really a rejection. It's been kind of a wall even since back here in February, our resistance point. You get that first rejection. Now this is the true test here. If this is the run up, essentially, if this is the run up for earnings, now this is just the index. It's not individual stocks can run a lot more. And again, it's really just been the big seven that's really been running. So I'm really just talking about big tech here. All the rest of them, again, shambles. Not everything is really doing very well. So maybe big seven will run up and push the index back up. It could be actually the banks that help out with that as well. The banks have been showing a lot of strength too. That's what we saw on Thursday with this push up here. And that was all purely banks because the tech was kind of just holding, and tech actually started selling off pretty heavy here, as well as some of the banks. So again, I do believe if we are going to get an earnings mode, I think that 4,600 is kind of what we're aiming for. My thing is, we may not actually hit it, but when we start getting around that point, if we get rejected here, that means we're going lower. And then in my mind, that would essentially mean that we are getting ready to price in a recession. Maybe the Q3 numbers are going to be what's going to cause us to force the hand of start cutting rates. We don't know. I think we've been sitting on a pause. I think we'll have a pause this week as well. And then that will give us some time that we've been sitting at a pause. So if that's the case, it would be long enough that we could potentially start. You have to understand when they start cutting rates, it's going to be like an emergency. What essentially China is doing is they've been in a frantic because both of their number one and number two home mortgage loans institutions are failing in big time. And so you start to see panic, you start to see everything else, that you start seeing rates cut and everything else. And this is another big thing. Another little side note here is, people are afraid that if I don't buy now, if I don't buy a home or a car right now, then everything's, I will never be able to afford it. And the rates are going to come down. People are just going to start buying. It's going to open the pool. People aren't going to automatically start buying. You have to understand that if you can hold off, the demand won't be there. It's not going to be there as soon as interest rates just start coming down. You have to understand when interest rates start coming down, that's at the point because it's so bad that people have lost so much money. So many people have been already kicked out of the house, foreclosures and everything at that point, that essentially there's not that much demand there. Right. And so the numbers, it's going to force prices to come down because people are trying to sell. And then when there's a massive supply of homes, right, at that point, it becomes essentially a buyer's market. At that point, it's not a seller's market anymore. You've been living in a seller's market for the past couple of years. It is not going to be that case when you get massive amount of supply, because then people are going to undercut it $200,000 to $300,000 like it's essentially ballooned into right now. That's going to come all back, and you have to understand that we're going to go on a hard reset to where if you're buying now, it might be a decade before you even see those prices again. And this is what happened back in like 2008. People were buying at the peak, and it took a decade for those prices to go back up to right now. So people are able to actually sell for profit now, back from 2008 when they bought it in the peak. And so these are things you need to be mindful of and be very careful of and be watching for these things and not let FOMO or any of these other things affect your decision buying. And I definitely know it can be hard, but still you have to be smart about it. So anyway, so I think that's where we're aiming for, is that 4,600, but we'll see there what's going on there. Talk about Bitcoin. Again, I think I'm really focused on crypto for the most part, aside from a couple techs that I'm looking at going into this dip because of the spot ETF. And I think your biggest gain will be in crypto, especially because institutions, I believe, are already buying. I believe there'll be one more big dip and institutions will do one big bag grab at that point. and then you'll get your massive rally after that point. Then you start getting the quantitative easing. I think at some point maybe next year, maybe back half of next year, or it just depends on how this event plays out. We need the Fed to start cutting first. Again, the Fed need to cut. That is your event that needs to occur before anything else occurs. Is the Fed need to cut? We need to price in a recession. Then we go from that. We need to kill demand. And we'll know when demand is killed when the Fed start cutting. So again, when this happens, again, I think you're going to get that dip. That's going to be your buy. I'm going to, again, not financial advice, but that's definitely the dip I will be buying and buying across the board. Again, highly focused on crypto and some of these other big technical markets that have good AI and potential going into. You have to understand there may be a war around the corner too with the US and Russia too, even though China's in a very fragile state. It may be more of a Cold War kind of thing. I understand what plays into that, especially with this race for chips and AI and everything. You have to start understand that aspect of it. So again, I do believe if this thing can dip and will potentially come back down to 16 or close to it, very well close to it, or even down here to just under 20. But again, I think institutions are just buying around here. There's a lot of consolidation here. You have to see this huge consolidation. We've been consolidating for quite a while. There has been moves in up and downs. I think this is going to make one more down move before it starts creeping up. And then understand, people are so worried about, oh, well, essentially the retail side of stuff is not going to push up Bitcoin up to 100K. No, it's not. But when you start Bitcoin, you need institutional money. Institutional money is setting up for when that spot ETF. This is what I'm trying to convey here, is that essentially institutions are prepping for that spot ETF. That's what they are watching. They're waiting for their last dip. They will buy a shit ton of Bitcoin. The spot ETF will be approved, and then it will have essentially the money it needs to start reaching these higher numbers. And I'm not saying it's going to go up to $1 million like some of these people are talking about, but I think it could get even higher, potentially 100K, strong possibility, if not more than that, especially when you got institutions buying. That's a lot more money and bigger bags coming into the market. And so you have to understand that. And so they are trying to get their foot in the door before anybody else. This is why it's only, I think it's like 25% of the globe is actually in crypto. You have to understand that at this point, it's going to get a lot bigger very quickly. So with that, we can take a dive into some of these other ticks, like the other ones I like. Again, you want to stay with big institutions that are well known. Again, in my opinion, if you're going to start getting more riskier stocks, you have to be very careful, because right now it's going to be a very fragile state over the next couple of years before there is going to be a major recovery. So even though I said there's going to be a big boom cycle, that's going to be led by tech and crypto. And then everything else behind that will have a very lagging effect. So this is why I said if you lead with that stuff, you can pick up the laggers after big tech has their big boom. And then you start picking up laggers on the back half of there, what could potentially start picking back up. So that's kind of what I'm alluding to there. But nonetheless, so Tesla, again, it's going to try for 300. We'll see if it breaks. If it can't break, again, I think this is going to be reset again back down, maybe to 2. We'll see. I think it might come lower. For some reason, I feel like if you're going to price in a recession, Tesla will definitely have to come down. I think this earnings will bring it back down, hopefully to back down to 150. We'll see if it gets down to 100. We'll definitely have to see. It's one of the best companies out there. So we will see. I think earnings is going to be one of the worst ones. Tesla keeps dropping their prices, which is kind of really screwing with a lot of the other EV stocks. That's why I don't really mess with the other EVs, because essentially Tesla's positioned themselves very well in the EV space. So much so that not even Ford can catch up, and that's why they're losing tons of money on their EVs, because administration's pushing EVs, but they're losing money and they're getting mad. So they're essentially going after the administration, saying, "Hey, you need to essentially pay us back because you had us invest in all these, and now we're just losing so much money in EV that we have to go back to the gas, essentially the gas engines." So we'll see what happens there. But watching that. Again, key levels of 200 and the 300. So we're just watching this essentially this 100-point level. We've been playing a lot of ranges, so that's something you got to keep in mind. Apple, a lot of bad news with Apple and the phones and what's going on with China, but it really needs to essentially break this 170. If it could break 170, We're definitely going to 150, in my opinion. At some point, you have to understand that when I say these numbers, I say at some point it will, right? You have to let the events play out. It's really bad looking for Apple. They've already had some really bad earnings, and people are just jumping into it because it's safe haven. But you definitely want to be careful with Apple, especially moving forward. They do have a lot of free cash flow, so that does help them a lot if they need to pivot. But ultimately, understand, I think in the next couple of earnings cycles, you're not really going to see that boom, maybe not till summer of next year. So, but we'll see. We'll see how things work out there. Palantir, again, another big one I do really like. Really kind of watching this. Really needs to break this 14 level. It's been holding well, but I think, again, we priced in a recession. I think we have a chance to at least get back to 10. But we'll see. I think, again, we need to let that whatever that event is occur, and then I think we can take it from there. BA. This is finally, like I said, broke back down into the range. We'll see if it can stay in this range. I'm looking for this to at least hook back up and retest the 220. If it can't break and starts breaking back down in this range, that's a problem for the overall general sentiment of the market. Again, this is why I have BA on here. It's a big value play. If value starts hurting, that means there's going to be more sell pressure. If you start getting all industries starting to sell again, you're going to start correcting and getting more into essentially that that pricing in a recession. So these are things you need to watch, and why I bring up a lot of the same stuff, because you want to be watching these and when you're going through earnings cycles. And then we have JPM, last but not least. And again, retested at bounce. We'll see if this will come and can hold the 140. Again, if it breaks back down, definitely not a good sign. There's still a lot of tension on the banks, and I believe we're not done with losing more banks. So this is what we need to be watching for here. But with all that being said, that's pretty much what I got. These have been really long rants, but there's just a lot of information coming out, a lot of theories I want to go over. So if you do enjoy the content, please like and subscribe and share with somebody you know who could get something out of this video. Until next time, I'll see you guys later.